1686. Want to get straight to all the market action right now. Amy Wu from RBC Capital Markets with me, along with Drew Nordlicht from HighTower and our own Rick Santelli. Amy, good to see you. What's your evaluation of the earnings season so far? And would you be putting money into this market given the backdrop?
Hi, Maria. Good to see you again. I think a lot of it is wait and see, unfortunately, as we go into FOMC tomorrow. Payrolls on Friday. From an options perspective, it's about a 1.2% implied move in either direction. That's on the S&P. But two things we're really seeing heading into this market is that you're really seeing the skew pick up in the market. So fears increasing again, but more still focused in September, October through this earnings season. And then that's still because we likely see FOMC tapering starting then.
Drew, how do you see it? Well, are you expecting anything out of the Fed tomorrow?
We're not expecting much out of the Fed tomorrow, and the GDP number is going to come in relatively around what was expected at 1%. What we're concerned about is this has become the 1% market. We've seen 1% GDP growth. We've seen 1.2% revenue growth. We're seeing 1.7% earnings growth. A lot of these one numbers are in there. So our concern is that earnings don't substantiate the market multiple, which has now moved up to 18.5. So what we're doing in accounts is we're starting to pare back our equity exposure, waiting for a pullback that we expect through August and September heading into the Fed meeting. And then additionally, we're advising not to abandon your asset allocation. It's very important that investors make sure that they're disciplined in their approach to the financial markets.
Rick, you got a whole host of data this week. GDP, the alphabet soup, you got the jobs number. What are you expecting? What's going to be most important, and what are you expecting out of the data?
And not only that, at 8:30 Eastern, we also get the August refunding announcement. And there's already been early word, as everybody has heard, that tax receipts, because we pulled a lot forward, think dividends, and the higher tax rate for many, created some one-time major revenues. So we're going to potentially be issuing less. That has a lot of ramifications, so that'll be at 8:30 Eastern. The GDP, Maria, I know everybody's expecting 1%. I would guess a little bit less. But I think the new calculation and the revisions are going to make this number a little bit hard to actually pin the tail on exactly where the economy is. And I think that the component I would pay most attention to in tomorrow's number on GDP will be the personal consumption. Last look, it was 2.6. Many believe it's going to be only about 1.6. And let's not forget, also the unemployment in the Eurozone aggregate. Their unemployment rate at 12.2 is at a historic high. They're looking for 12.2 again.
All right, we'll leave it there. Thanks, everybody. Really appreciate it. We're going to talk right now with Mark Hurd, Oracle, one of the world's largest enterprise technology companies, in one of the most surprising moves in the company's history, partnering with some of its fiercest competitors.